Right, there is one word to accurately describe today's trading session, which is ugly. The indexes are down less than 1%, but that is not true for the positions in our holdings. This principle is called beta. Beta is the measure of the movement of a stock as compared to the overall indexes. So for instance, when the index moves, say 1%, stocks like Chipotle, Mexican Grill, Netflix, Decker, Salesforce.com, Cree, F5, they are all high beta names. So for every 1% that the market moves, you may see these names all move 3%. Okay, this high beta works on the downside as well as the upside. So with today's market down or close to 1%, you're getting big moves out of the high beta names, and especially Cree, thanks to their less than stellar earnings quarter that they reported yesterday after the close. So I know you're all wondering what in the heck we did to repair that nasty trade, several trades that we had in Cree. All right, now first of all, uh, the LED space, nothing about the space has actually changed since yesterday's earnings. And in fact, most of the weakness in the quarter was due to some overstocking over in China. Basically, suppliers or distributors got excited about LED light bulbs for outdoor lighting. They stocked a ton of bulbs, and basically there wasn't a complete sell-through, which means that there was an inventory build, which means that orders slowed, which means that Cree shipped less product. That's basically the result, the end result, or how we got to that result in the quarter. Now, do not expect the next quarter to be tremendously better because the Chinese New Year, which starts on February 3rd, lasts for 15 days. And I have to think there's probably a slowdown before the Chinese New Year to get ready for it, then the actual celebration itself, and then the cleanup. So in all honesty, next quarter isn't going to be that terrific for Cree either. They're guiding somewhere between 38 to 45 cents for next quarter. Okay. Keeping that in mind, the stock or the story is still intact. From the recent highs of $73 a share, Cree has declined about $20 a share, or 27.4%. That is an absolutely massive decline, including the 14% decline today alone. So what we did is swapped out of our stock and into the January 2013 40 and 50 calls. Okay, obviously those are already in the money. I actually like the 40s better than the 50s because there's less time value that we paid for in the 40 calls than there is in the 50 calls. And we may actually add to those 40 strike calls out in January 2013 if we see the stock decline any further. Basically, we took the risk of what 100 shares is basically around $5,500, $5,400. We took that off the table and only spent about $1,400 for the call. So, we cut our exposure by, we reduced it by 75%, and we still have all the upside that you would as if you own the actual stock, except obviously we have to be right by January of 2013, or we've got a concern about those calls. But being that this story is going to take place over several years, and that nothing about the trend towards LED lighting has been affected at all, certainly not in the last 24 hours, we still feel extremely strong, and we're going to re-emphasize our strong buy recommendation. In fact, if we do the math, right, Cree now has $10.70 per share in cash. They're adding about $10 million to the war chest every single quarter. All right. Now, this cash makes about up 19.9% of the share price. The PE, the forward PE after the decline is already only 19.8. If you back out the cash, then you're talking about a forward PE that's around the 15 level. Okay, that's pretty dang cheap when it comes to a high growth stock like this. And we do think that the growth is still intact. Just after 8 quarters of beating earnings expectations, well, we should have known better than to play this ahead of the quarter. Obviously, you can only have so many good quarters in a row before eventually there's a bad quarter. All right, not everybody's Apple. But in terms of the market share, LED bulbs currently only make up 4% of the market share. By 2014, all the incandescent light bulbs are going to be phased out. And in other countries overseas, they've already phased them out because they're just simply not energy efficient, and they don't have the kind of power infrastructure we have, so they need lower energy sucking solutions, right? LED light bulbs do that. They're about twice the lifetime of a compact fluorescent bulb, and they're even more energy efficient than a compact fluorescent bulb. So the reality is, once the Cree light bulb gets to the standard that you feel like it's comparable to the current 60 watt, well, eventually the current 60 watt just simply won't be available, won't be on the market anymore. So the only choice you'll have is between compact fluorescent and then the LED bulbs. and Cree's color rendering is already in the 90th percentile or above, whereas most complex fluorescents are somewhere between 75 and 85. So the reality is the Cree bulb is a better bulb. They are taking down capacity utilization to compensate for what will probably be a slowdown in terms of product that's shipped because of the inventory that's already hanging out there in the channel. So on a valuation basis, Cree is now extremely attractive. Not only is Cree attractive, but VECO Instruments, we're probably going to raise it from a buy to a strong buy. Because VECO Instruments, if you do the same math on VECO Instruments and back out the over $10 a share in cash on their stock after the decline in sympathy from the Cree and in sympathy from semi-LVS, right, which is ticker symbol LEDS, then you get VECO Instruments trading at a 7.5 forward PE. So the reality is that these stocks have now become cheap, right? They're now pretty approaching that. VECO Instruments is a value play, ticker symbol VECO, and Cree is extremely attractive on a valuation basis considering the way that they're growing. Okay, so that's what we did with our long stock. We rolled all strikes that we were short in terms of put spreads down and out to the February 55.50 put spreads in Cree. Obviously, we had to increase our position size. A special note about position size, we had somebody contact us via Twitter and ask us about position size or ask us about what they were going to do with Cree, and we got into the conversation of position size. Look, guys, as long as you keep your position size in check, you can live to play another day. It's when you make a bet too large and it goes against you that you blow yourself up. Okay? Please, please, by all means, do not make any one trade bigger than 4 or 5% of your portfolio. That way, if you suffer a total loss, you can move on as if, well, you won't have the best year, but you'll still be in the game. And consistently staying in the game for many years is what makes you all that money. Okay, so keep in mind, please, please, please keep your position size small. Do not let your position size get out of hand. Okay, now with the call spreads that we had, well, we turned our 60, what did we have? 57.5, 62.5 call spread, long call spread. We turned that into a short 55, 57.5 call spread. If we get in trouble, if for some reason the stock makes it back above 55 by Friday, we'll roll those up and out just like we roll the put spreads down and out, and we'll have like an iron condor, right? Which means we'll end up short some call spreads and short some put spreads. Look, you can only be wrong one way, right? The stock can't break both strikes on options expiration. So for February, we're going to play both sides of it until we see. For all we know, Cree's going to settle into a range, and we could do iron condors month after month until we get to profitability. Not a big deal. This happened to us last year in Goldman Sachs. It took us 6 months to get out of the trade, right, from April to October, but we ended up being extremely profitable on the Goldman Sachs trade, and it ended up being one of our best trades of the year. We've done our homework on Cree. We're not concerned about the company. They have $0 in debt and $1.11 billion in cash on the balance sheet. And again, they're adding about $10 million in free cash flow to the bottom line every single quarter. They know what they're doing. They're not stupid. They didn't shy away from any questions last night on the conference call. If I heard some skittishness in their voice or if they answered questions terribly, I probably would have changed my opinion on the stock. But nothing about the story has really changed. And they warned everyone that adoption of a new product, right? They're at 4% of overall market share in terms of all light bulbs that are sold. Only 4% of them are LED. I think that number could be 25 to 30% in 2014 when your only two choices are either compact fluorescents or LED bulbs. That's why you own Cree. Okay, you don't own it for the next quarter, the one after that. You own it because incandescent light bulbs are going to disappear forever, and they're going to be replaced by either compact fluorescents, which don't last as long, are not as energy efficient, and have basically worse lighting, or you're going to replace it with the best-in-class Cree LED bulb. I think Cree is the new Apple of lighting. We'll see how it plays out over time. I prefer it right now to stay in the money calls and short put spreads rather than get long stock because there's just so much volatility, and I don't want to put that much capital on the table right now. Okay, keep your position size small. Don't forget Deckers. If you're still holding on to hope with those 80, 75 put spreads that expire in January and Deckers, we're probably going to have to roll those out. We're going to take them into options expiration because at this point, right, time is on our side. So keep your position size small. We also erased some cash. We sold off fertilizers and coals today. Keep that in mind. Thanks for joining us again today. Have a great day, and we'll see you tomorrow.